Is the housing correction in the Greater Toronto Area over? According to RBC, in this article, it states that the market correction is over in 2023. Now, I'm aware that we didn't hit our target inflation numbers and they're slightly higher than last year. Now, we know Bank of Canada will not drop the rates in the next few announcements. In fact, they may even increase them slightly given the current inflation rates. However, looking at the bigger picture, we can see that the affordability and qualifications haven't changed with applicants looking to buy homes. However, the overall average price has increased 5 months in a row. The rising prices have led Bank of Canada to believe that the market correction has reached the end of its phase. My name is Chandra from the Chandra Real Estate Group, and my team and I practice real estate here in the Greater Toronto Area. We're very thankful for some of you viewers to reach out to us and do business with us. If you would like to book a call with myself or a team member to talk about buying, selling, or investing in real estate, please click on the link below and you'll be prompted on the next step. The big question that most people seem to ask is how much the prices need to climb up for us to determine whether the market correction is actually over or still yet to come. If you've been watching my videos for the past few months, you will notice that I've been saying time in and time out that the average prices, the days on market, all of the indications of the market stats show that the prices are on an incline, but we just didn't know how far up they're going to keep going up. According to RBC, the market correction is over and prices are going to start climbing up even further than they already have been. So we're going to talk about that in depth. According to this article by Toronto Star, we can see that they are declaring the market had dropped 18% in the last few years. However, this year we had a turning point, and now in the spring prices, they're noticing a climb up of 11% month over month, which is making a strongest monthly increase in the last 3 years. That's huge. That is a good reflection of what we're seeing with the multiple offers, prices over asking price, and the overall chaos that's starting to be noticed in selling properties now. That is reflective of what we're seeing in the market with multiple offers, low supply, and high demand in most markets. Another article by CP24, we can see that they're stating the sellers are back in the driver's seat. They're further stating that early tentative signs of a turnaround in Toronto and Vancouver were confirmed in a big way in April. The report notes that home sales have jumped 27% and 25% month over month, respectively, rolling back to the first quarter of the correction in one go. It appears that buyers are quickly regaining confidence in both markets, and now Bank of Canada has paused its aggressive rate hike campaign. RBC has said that as recently as December, the Greater Toronto market had been a buyer's market despite the low supply and the high demand. It's funny how that works. They said that it was a buyer's market in December, and now it's quickly turned into a seller's market. This is how you can determine that we had reached the bottom early on this year in terms of prices, and now they're slowly trickling back up. Looking back at the data from 2022 doesn't help because the prices were very different last year than they are in the last 5 months. The May data is going to look even better than the April data. Prices are going to be even higher, days on market lower, and less inventory in general. This is what we're noticing from the active conversations we're having on the ground level with buyers, sellers, and comparing market statistics and homes for sale in the neighborhood. So RBC believes the market correction is over, but what do you believe? I know there's some people here on YouTube watching this video and economists that are smarter than me that still believe that the market correction is not over. But working on the ground level with buyers and sellers day in and day out, I can tell you that there isn't enough inventory right now. People are buying properties, but there aren't enough to choose from. Most people are buying from their equity or building up from appreciation, but overall, there just isn't enough properties. From my convos with buyers and mortgage brokers, we're noticing the most popular type of mortgage that people are taking is that 3-year fixed term on a variable rate. And that gets people, including myself, to wonder, will the prices actually fall? And if they will, why are these people buying into variable rates? Maybe this is a bounce back from the last 2 years where it was a bit slow in real estate, but it's been bouncing back for the last 5 months. Does this mean that it's going to stop at this point? We don't know. What we do know is that this doesn't feel unreasonable or unrealistic. In fact, it feels real because there's such a low inventory. Prices are bound to climb up. We also know that buyers are back in the market and don't have hesitance and gain confidence over the last little bit. They see that the prices had bottomed out last year in the middle towards the end, but now they're realizing how quickly they're climbing back up and don't want to miss out. I have another chart for you to look at where we can gauge the market stats and the trends we're seeing right now. If we look at this chart, we can see that the sales back in March were almost 7,000. Now, I know this is from March, but if we look at the April and May numbers, it's safe to say those numbers are even higher. I like to break this down even further. If we look at the detached homes in the GTA that represent 44% of the entire market, it explains why the numbers are so inflated. We're talking about the biggest asset class, which is the most expensive as well. Then it's the condos that are taking up 30% of the market share. Now, would they also break it down further to price range, and the most amount of sales that are happening turn out for detached in the range of 1 to 1.5 million. And so if you're looking for a detached home under 800,000, there just aren't enough options anymore. If we look at condos on the flip side, most of the sales are happening between 500 and 700,000. So if we're looking at a condo below that price point, it's safe to say you're going to be entering a lot of competition. As we see more sales happening, we're going to need to see more of these property types in the market to balance out the market. So did RBC make the market correction statement too early, or are they right? Guess we'll have to find out in the next few months, but I am curious what you think about the current conditions. Comment below, and if you like this video, please like and share it with a loved one. Thank you for watching, and as always, we provide results that move you.